Over the span of just a couple of weeks, the price of Bitcoin has dropped by more than 20%. The price has been going downhill ever since it hit its all-time high of $69,000 in November of 2021. Everyone, of course, was anticipating that it would shoot again like it did in July 2021, but it does not appear that this will occur in the near future because the Federal raised the interest rate by half of a percentage point to a range of 0.75% to 1%, following a smaller rise in March. This is the most significant increase in the interest rate in the past 22 years. It's not just Bitcoin. Almost all cryptocurrencies are currently down. The value of Ethereum has fallen by almost 20% as well. Even if we take a glance at the stock market, we see that things are not always as they seem. Stocks like Netflix, as we've seen, have fallen so far that even major investors like Bill Ackman have sold out their whole holdings because they weren't prepared. Even Apple, the largest and most reliable tech corporation in the world, is down nearly 14% at the time of writing this script. In the grand scheme of things, Bitcoin has lost more than 20% of its value in the last few days. Since its peak of $69,000, it's fallen by more than half. Because of this, as the price continues to drop, even more investors are considering selling off and getting out of the market before it's too late. The question that arises now is whether or not the price of Bitcoin will continue to crash down. Will it be able to hold together until the end of the year? How did day traders manage to wipe out all of the profit they had made over the course of the previous 2 years in just 1 week? All of these questions and many more will be answered by our team at Crypto Coach. So please give this video a thumbs up, and here is a disclaimer. This is not a financial advice, and everything that's mentioned in this video is for educational and entertaining purposes. When Satoshi Nakamoto launched Bitcoin soon after the crash of 2008, its ultimate objective was to decentralize the financial system. The fact that the entire system was in the hands of a few major banks was the main cause of the major recession in the first place. There wouldn't be nearly as bad of a crisis in the first place if there were a greater number of checks and balances placed on these greedy bankers. Naturally, this is a matter that may be discussed on both sides, but the concept driving the crypto is absolutely brilliant. The one and only concern with this is that governments have a strong desire to exercise control over the movement of money into and out of the country, because this is the only method to bring sufficient funds into the treasury to ensure the nation's continued existence. Because of this, it was first popular on the black market, which is a place where individuals trade illegal items. However, back in 2015 and 2016, an increasing number of people became aware of the potential of the cryptocurrency, which caused its price to skyrocket. The price of one Bitcoin increased by more than 2,000% throughout the course of a single year, 2017, taking it from less than $1,000 to almost $20,000 before it collapsed. At that time, people all over the world started getting excited about Bitcoin, and all at the same time, hundreds of new coins were created. On the other hand, something else that was happening at the same time was that Bitcoin started transitioning from being a currency into an asset class of its own. Bitcoin is no longer a medium of exchange. Rather, it is a digital asset similar to gold in that its price is subject to fluctuations. People purchase Bitcoin not because they want to use it as a currency, but rather to store wealth or benefit from trading it. In point of fact, we now have USDT, which are cryptocurrencies that are linked to the dollar in order to allow people to use them as a currency. The question that remains, however, is how is using USDT different from using real dollars? In actual fact, the large majority of cryptocurrency transactions take place on exchanges like Binance and Coinbase, both of which are becoming increasingly controlled with each passing day. So how is crypto different from typical banking? The only thing that's different is that money transfers have become considerably faster, but the fact that banking institutions are still in control creates the very problem that crypto is supposed to fix. Because most people aren't very good with money, having our money largely managed by banks isn't always a bad idea. Because so many people lack basic financial literacy, the crypto sphere is swamped by scams. Many people made millions of dollars by making Squid Game coins during the height of the craze. There were those who placed their funds into an asset they had no idea where it came from, nor had any actual information about it. They hoped, however, that this is their chance to finally make the millions they had hoped for. In the end, it turned out to be just another fraud. If you look at how much money was taken in 2021, that's a drop in the bucket. As a result of decentralized finance, or DeFi networks, scammers will stash away a record $14 billion in cryptocurrencies in 2021. Imagine for a second how much money that is. $14 billion. You now have a better understanding of how the crypto industry makes its money. There will be a lot of backlashes for saying this, but it's happened regardless of your opinion. Rug pull schemes are a new popular way for developers to steal money from investors by building what appear to be reputable cryptocurrency projects before stealing the money and leaving. Police won't help because following these folks isn't a trick. Recall the incident with BitConnect, in which the crooks stole more than $1 billion and have not yet been traced. This is why we sometimes need financial organizations to control the market and prevent such scams, despite the fact that these institutions may sometimes abuse the authority that they have. Again, I am not attempting to defend the selfish banks because they are really hardly examples of moral. $14 billion is hardly any money when compared to how much money people have made in the previous 2 years. The price of a Bitcoin went from roughly $10,000 to almost $69,000, which represents a rise in value of literally hundreds of billions of dollars. Nevertheless, since the Fed hiked interest rates by 0.5%, the boom is gone and it is quite doubtful that it will return anytime soon. Always expect ups and downs in the economy. Cheap money has ended, and the coming few more years will be a little tougher. It's not just for crypto, it's for the entire market as a whole. Consider PayPal, for instance, as an example of a high-tech firm. To put it in another way, it lost 40% of what it earned during the pandemic if you compare March's 2020 drop to where it was before. Shares have fallen by 75% from their all-time high. The possibilities are endless. Netflix, Meta, you name it. Everyone is on the floor. Each one has fallen a significant amount. When the Fed decides to raise interest rates, risky assets are the first to see a decline in value because investors would rather keep their money in more stable investments. Because of this, headlines like "Day Trader Army loses all the money it made in meme stock era" can be found in the news today. This is true not only for stocks but also for cryptocurrency as well. Consider the most well-known crypto meme Dogecoin, whose value has dropped by more than 82%. The issue that needs to be answered is, will the market continue falling? The answer is going to be yes, as long as individuals are liquidating their holdings and closing their positions. But sooner or later, that trend is going to come to a stop. The market is going to settle, and we are going to get rid of companies that aren't actually contributing any real value to the market, but are there because they sound interesting. I am well aware of how distressing it is to witness the overall decline of your portfolio. Consider the case of Brian Armstrong, the founder of Coinbase, whose personal wealth fell from over $13 billion to as little as $2 billion. The platform expressed disappointment in its earnings, which led to some people speculating about the possibility of going out of business. The most alarming aspect of the situation is that, according to Coinbase, users stand to lose all of the cryptocurrency that is held in their accounts if the cryptocurrency exchange goes out of business, which is making matters an even more serious problem. I wouldn't be shocked if it dropped a little more, but I'm not going to sell any of my crypto assets because I'm not a trader, but rather an investor with a long-term perspective. For this reason, short-term price fluctuations don't upset me as much as they do other people. I appreciate you taking the time to watch this video. Check out our other videos if you like this one. By subscribing below or pressing the notification bell, you help support our channel. As always, this is Crypto Coach and I'll see you in the future video.